Most beginners lose money in trading, not because trading is impossible, and not because the market is rigged. They lose because nobody teaches them the right way to start. So beginners do the same things. They overtrade, use too much leverage, risk too much money, trade emotionally, and eventually, they blow up their account. But what if trading could actually be simple? What if you only needed a trend, a few levels, risk management, and patience? In this video, I'll show you the exact beginner strategy I would use if I had to start from zero today. Simple, clean, repeatable. Let's begin. The biggest mistake beginners make is trying to make money too fast. That's it. People start trading with unrealistic expectations. They think, can I turn $100 into $1,000 this week? And that mindset destroys accounts, because fast money thinking creates emotional trading. You stop thinking logically, you chase candles, you enter late, you panic sell, you revenge trade, and suddenly, you're gambling instead of trading. Professional traders think differently. They don't ask, how much can I make? They ask, how much can I lose? That single mindset shift changes everything, because survival comes first, profit comes second. Now let's talk about the strategy itself. And the best part, you do not need 10 indicators, expensive courses, or some secret algorithm. You only need 3 things. First, identify the trend. Ask yourself, is the market going up, down, or moving sideways? Because trading with the trend is easier than fighting it. If price keeps making higher highs and higher lows, that's an uptrend. If price keeps making lower highs and lower lows, that's a downtrend. Simple. Beginners lose money because they try to predict reversals. Professionals follow momentum. Next, mark important levels. Support, resistance. These are areas where price reacts repeatedly. This is where traders make decisions. And this is where you should pay attention. Do not enter randomly in the middle of nowhere. Wait for price to approach important levels. Patience is part of the strategy. This is the most important step. Risk management. Because even good traders lose trades. Losses are normal. The goal is not to avoid losses. The goal is to control them. Never risk too much on one trade. As a beginner, 1–2% risk per trade is more than enough. And always use a stop loss. Always. One bad trade should never destroy your account. That's how professionals survive long term. Now let's combine everything. A good setup usually looks like this. The trend is clear. Price reaches support or resistance. Your risk is controlled. And you already know your entry, your stop loss, and your target. That's a real trade. Not emotion, not gambling, a system. And here's something important. If there's no setup, don't trade. Most beginners lose money because they trade out of boredom. Professionals wait, and waiting is a skill. Now let's talk about psychology. Because psychology destroys more accounts than bad strategies. Fear makes people sell too early. Greed makes people hold too long. FOMO makes people enter too late. The market is emotional, but professional traders stay calm. They follow plans, not feelings. And honestly, this takes practice. You will make mistakes. Everyone does. But if you track your trades, learn from them, and improve slowly, you become dangerous over time. Trading is not a shortcut to fast money. It's a skill, and like any skill, it takes time to develop. So stop chasing excitement. Stop trying to get rich overnight. Focus on discipline, risk management, and consistency. That's what actually builds profitable traders. And remember, the goal isn't to win every trade. The goal is to survive long enough to improve. If this video helped you, subscribe for more beginner-friendly trading content, and check out the next video on the channel, where I break down the biggest emotional mistakes traders make, and how to avoid them. See you in the next one.